All right, let's dive right in. Today we're going to break down something pretty wild: how United Airlines managed to have an absolutely stellar 2025. Now, this was a year that was, frankly, a nightmare for the entire airline industry. So United's story? Well, it's a fascinating tale of a killer strategy and some serious resilience.
So, to really get why United's performance is such a big deal, you have to understand the skies that we're flying in. And let me tell you, 2025 wasn't just a bit of turbulence. We're talking about a full-on storm for the whole industry. For a lot of airlines, just, not losing money was the main goal.
And man, the headwinds were no joke. We're talking about a huge U.S. government shutdown that cost United $250 million just on its own. Then you've got the FAA slashing flights at 40 different airports. The economy was all over the place. And to top it all off, United was dealing with its own operational mess at its Newark hub. I mean, it was basically a perfect storm.
So that's the big question, right? With all of that stacked against them, how in the world did United not just survive, but actually grow its profits? It's kind of amazing. Let's dig in and find out.
First up, beating expectations. And despite all that chaos we just talked about, let's get into the numbers, because this is where the story gets really compelling.
Let's start with earnings per share, or EPS. It's basically a key scorecard for a company's profitability. Wall Street, the pros, they're expecting $2.97 per share. But United? They came in at $3.10. That's not just a little better, that's a big beat. It tells you they were doing something right that even the experts didn't quite see coming.
And check this out. During that same incredibly tough final quarter, they pulled in $15.4 billion in revenue. That's not just a record for the year. That's the highest revenue quarter in the history of the company. Think about that. In the middle of all those problems, they were bringing in more money than ever before.
And if we zoom out and look at the whole year, the story is just as good. Their full-year earnings per share hit $10.62, a really solid number. But what makes it truly incredible is when you see how they did compared to everyone else.
And this is the kicker. United didn't just do well in a vacuum. They're expecting to be the only major U.S. airline that actually grew its earnings in 2025. The only one. Everyone else was struggling to stay level or was losing altitude, and United was the one plane that was actually climbing. It's pretty remarkable.
So how'd they do it? Let's get into their playbook and break down the strategy that powered these amazing results. Okay, so their whole game plan is about becoming what they call a brand-loyal airline, and it's built on three really simple but powerful pillars. Number one, go after premium customers. Number two, just run a really, really good airline. And number three, keep a super tight grip on your costs. Let's break them down. All right, pillar one, focusing on premium. Just look at these numbers. Premium cabin revenue shot up 11% for the whole year. Meanwhile, main cabin revenue actually dropped 5%. That tells you everything, right? The real money is at the front of the plane. So they're pouring money into that experience. New planes, better seats, even super fast Wi-Fi to get those customers who are willing to pay more for a better flight. Pillar two is just about being excellent at what you do. And even with all the chaos, United absolutely crushed it. We're talking the fewest canceled flights in their entire history. They were number one for being on time during the holidays, which is just insane. And get this, even during that government shutdown, they got their best customer satisfaction scores ever. When travel is stressful, being reliable like that builds some serious loyalty.
And pillar three, keeping costs in check. Now this is crucial. They did it without making the experience worse for customers. There's this key metric. It's basically what it costs to fly one seat, 1 mile, not counting fuel. Well, theirs barely budged. It went up less than 0.5% all year. That's just incredible discipline. They saved $150 million just by being smarter about what they buy, and they're using tech to make everything run smoother.
All right, section 3, the battle for the skies. Because, this strategy isn't happening in a vacuum. It is a flat-out war for customers out there, especially in the big, important hubs.
And United is definitely not backing down. Their CEO, Scott Kirby, basically threw down the gauntlet when he talked about their Chicago hub. He said, in 2026, we're drawing a line in the sand. I mean, that is some fighting talk. And the thing is, they've got the results to back it up. And just look at this. This is the Chicago hub, a major battleground. Their main competitor reportedly lost about $500 million there in 2025. United, they made $500 million. That is a $1 billion swing between the two. They are not just surviving the competition, they are absolutely dominating it, and they're doing it profitably.
So, what's next? After a year like that, what's the plan going forward?
Let's look at Section 4, the 2026 flight plan.
You can really see their confidence right here in their forecast. They hit over $10.50 in earnings per share in 2025. For 2026, they're guiding for somewhere between 12 and 14 bucks. Let's just call it 13. That's more than a 20% jump in profit in just 1 year. That is a seriously bold statement to make.
And it's not just about profits. They're going after some huge goals. They want to get their finances super solid, what's known as an investment-grade balance sheet. They plan to generate over $2.7 billion in free cash. They're getting over 120 brand new planes, all while pushing to make their profit margins even bigger. They are not slowing down.
So when you step back and look at the whole picture, what's the big lesson here? What's the main takeaway? Well, it really boils down to a fundamental difference in how you run an airline.
Okay, so there are basically two kinds of airlines out there. First, you've got what are called spill carriers. Their whole game is price. They just want to fill empty seats, even if it means losing money on a flight just to grab any customer they can. But then there's the brand loyal model that United is building. This isn't about being the cheapest, it's about being the best. It's about the product, the service, the reliability, so that people want to fly with you. They choose you for a reason.
And that really leaves us with the big question, doesn't it? United proved that this strategy can work, even in the toughest of times. But looking ahead, in an industry that's as brutal and unpredictable as the airline business, is this the only way to really win in the long run? Is building that deep, genuine brand loyalty the ultimate trump card? Something to think about.